Hello guys, welcome to PB Trading official YouTube channel. Now if you haven't subscribed to this channel, make sure you do that. Hit that subscribe button and get notified anytime we drop a video like this. Make sure you like and share this video as well. Now today we're going to talk about understanding market structure, understanding what is bearish flow, what is bullish flow, how to notice a shift in market structure, and how to check the understanding of market structure to your advantage in the market. Now let's quickly get into it without wasting any more time. Now we already know that when price is making higher highs and higher lows, it means price is in a bullish trend or price is in an uptrend. In the same vein, if price is making lower lows and lower highs, it means price is in a bearish trend. Now I want us to first note the difference between a break in structure and then a break in market structure. For once, I want you guys to know that they are not the same. Most traders are confusing break in market structure with break in structure or break of structure. Let's first notice what break of structure is. Now price is making higher highs and higher lows. Now anytime a high is broken in an uptrend, it means you have a break in structure or a break of structure, as most of you may be conversant with. Okay, so we have a break of structure here, and then we have a break of structure here as well. So yeah, I will represent the break of structure with BOS. That's what the most trading community is again conversant with here. So break of structure, anytime a high is broken in an uptrend, and anytime a low is broken in a downtrend, we again have a break of structure. So a break of structure here, and another break of structure here. Okay. So I just want to quickly represent them here so that we just get a clear picture as we move on. So break of structure here as well. Okay. So this is what we mean by break of structure generally if you are looking at the market cycle. Now, if a low is broken in an uptrend, so if price comes here and breaks a low here, if this low is broken here, then we can say that we have a break in market structure. So I represent that one too by BMS. So I represent break in market structure by BMS. Okay. So anytime a high is broken in a downtrend too, we term that one too as a break in market structure once more. So that is basically like the difference, the clear difference between break in structure and then a break in market structure. They are never the same, so you should never confuse them to being the same. Now let's get into some more action here. So this is generally an uptrend, as we have already established the characteristics of an uptrend. An uptrend is characterized by higher highs and higher lows. So if we have this one here, we are generally looking at an uptrend. And if we have this here, we are looking at a downtrend because price is making lower lows and then lower highs. So we have a downtrend here, then we have an uptrend here. Now as far as price is making higher highs and higher lows, we term the structure of the market or the price as bullish. So as far as price is making higher highs and higher lows, price is having, or market is having, the bullish structure. This is Euro USD H1. So as far as Euro USD H1 is making higher highs and higher lows, the overall structure of Euro USD H1 is bullish. And as far as Euro USD H1 is making lower lows and lower highs, it means the overall structure of Euro USD H1 is bearish. Now, the very moment where price breaks a low here in an uptrend, it means the market structure or the bearish or bullish market structure of Euro USD has been distorted. It means that the market structure has been broken. Okay, now a break of structure on the other hand just conforms to the general market trend. You see, price makes a new high here, breaks old structure, makes a new high, breaks old structure, makes a new high. So break of structures is in conformity with the current trend, but a break of market structure signifies a distortion in the market trend. Okay, and optimally, when price breaks market structure, it pulls back into structure again and then continues with a new trend. Continues with a new trend. That is what essentially happens 99% of the time in the market. So price now comes into a downtrend, and then we have break of structures here, a break of structure here too. So that is how the cycle is. Now let's quickly look at, let me just label this real quick here. We quickly look at a bearish to bullish scenario too. So at this point, price is making lower lows and lower highs. The general trend or general structure of the market is bearish, so price is in the bearish market structure. Now when this high here gets broken, it means the bearish structure of the market has been distorted. Once more, what happens is that price pulls back and then continues with a new trend, which is a bullish structure. Now price will do that until a low here is broken again. Now let me quickly label this ones as well. So price will keep breaking structure here, because now the new structure we have here after this high was broken is a bullish structure. So we moved from a bearish structure into a bullish structure once the high or the old high here got broken. Okay, so at this point we have price breaking structure to form new highs. So there was a break of structure here to form a new high, and then there was another break of structure here to form another high here. So now this happens until another low here gets broken. So price will optimally continue this to the next cycle once a low here is broken. And at that point, when that low gets broken, what we term is a break of market structure. So we have a break of market structure here. And then once again, what essentially happens is that the new structure, which is the bearish structure, forms by first pulling back into structure and then making a new low. And again, break of structure here again. And then the cycle continues. So you see, this is how simple market structure is. So when you have this idea, you don't go looking for sales at this point here whilst the market structure has been broken. And at this point here, you don't go looking for buys whilst the market structure has been broken. It guides you to know when the trend has been changed, or when the overall trend or the structure of a particular asset in a particular time frame has been changed. Now I want us to go into the market and look at instances where market structure cycle has been noticed, and how effective it can as well be. Okay, so let's look at a few instances here where we can see the market structure and how it conforms to what we are talking about. So from this point here, we can see markets making lower lows and lower highs. Markets making lower lows and lower highs up to this point. So at this point, market was making nice lower lows, it was in a clear bearish structure up to this point where this high got broken. So I normally represent breaking structure with this symbol here. So we had a breaking market structure here. So price was in a bearish nature, making lower lows and lower highs, bearish structure until this high here was broken. Then notice what happens. Price breaks this high, pulls back, and then continues to make higher highs. at this point. So notice the swift change in structure once we have the break of market structure here. Price optimally goes straight into a change in market structure. So at this point, you don't go looking for buys, you don't go looking for sells, because you know at this point the market structure has been changed from a bearish structure to a bullish structure. Price kept making higher highs until this structure here, this low here got broken. So this low here got broken at this point. Okay, so price came all the way down to break this low, pull back, and then made another low. So once again, once this low was broken, market structure was changed again to an intermediate, to a short-term bearish structure. One thing you need to know is that the structure doesn't have to be long-term. It can be a short-term structure. It can be an intraday structure. Okay, so price came into a short-term structure, made a new low, but failed again to continue down. Made a high here. Price made a high here. Failed to make a new low, and then broke the old high here. So broke this high here. So at this point again, there was a break in market structure. First, let me notify this one here. Then at this point again, there was another break of market structure. So you notice that once market structure was broken again here, price went away all the way up, pull back a little, and then continue the bullish nature of price action. So new high, low, low. And then at this point, price failed to make a new high to continue a bullish structure and then broke the old low. So at this point, the old low was broken at this point. At this point actually. So the old low was broken at this point. So from this point onwards, we're only going to look at getting sell entries. Once the bullish nature here was distorted, we're only going to look at getting sell entries. Okay, so because price was changed from once more a bullish nature to a bearish nature. Price pulled back and then made a new low, pulled back, made a new low. So let me quickly go through that. So lower high, lower low, lower high, lower low again. And then price ultimately came to break this high here. And again, there was a shift in general structure from bearish structure into a bullish structure once more. So you could see right after that, price pulled back, which was a very deep retracement. It was very deep. It came this far low. But needless to say, price still conformed to the fact that bearish structure was broken here. Price pulled back very deep, then continued the uptrend to this point. So then from that point, price made a new high, low, and then another high to continue with the structure. And again, price made a retracement to break the old low here. So we had a break in market structure once again at this point. Break in market structure again at this point. And then you could see price from there pulled back after the break of market structure. After the break of market structure, and then made a new low, pulled back, and then made a new low. So you see, the whole market is in a beautiful cycle of bearishness and then bullishness. You just have to notice price making clear bearish structure. Notice a break of an old high in a bearish structure. Now price moves into a bullish structure, makes higher highs and higher lows onto an old low here, gets broken, pulls back, move into a bearish structure, and the cycle continues just like that. So if you are trading, if you are looking at the structure, then it gives you idea if you are looking at sells or buys. If you are looking to pick out a sell entry or a buy entry, With this knowledge, you don't go in the market trading against the trend. You are always trading with the trend because you are paying attention to the structure. You are paying attention to price making higher highs and higher lows. You are paying attention to break of market structure and a break of structure. With this knowledge, you know that you are always going to find yourself having high probability trades and getting the best out of every trade that you set out to take. If you enjoyed this video, if you learned something, make sure you like and share this video. Make sure you subscribe to our YouTube channel, PB Trading Official YouTube channel. Hit the subscribe button and get notified anytime I drop a video like this.